Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Hey, I want to get right down to business here because there's a lot of things that have changed in the whole mortgage industry in the last few years. And one of them is a lot of what they call non-QM or quality mortgage products have become available. But I think that term is misleading because non-qualifying means that people don't qualify, but that's not really what it means at all. It means that product does not fit into Fannie Mae or Freddie Mac's guidelines or HUD or VA for that matter, which are called agency transactions. What's fascinating right now, 25% of people getting a mortgage right now are getting some form of non-QM product. So I want to talk briefly about bank statement loans for self-employed, DSCRs for investors, asset loans for high net worth people that don't have a lot of income, and how they can impact the client. And by understanding these products as a real estate professional, how can they benefit you when you're out in the field talking to clients? All right. So first thing, let's talk about self-employed. I believe self-employed, you and I have been self-employed most of our lives. And we know that self-employed people can be the heartbeat of America. But what happens is we hire CPAs and they look at our taxes and they say, oh, Tom, you made $500,000 last year. You're going to pay $150,000 in taxes. And you're like, I don't want to pay $150,000 in taxes. So they find ways to rip things off, depreciate things, cost segregation, whatever it takes to get that tax consequence down. But then the problem is then your tax returns show, I grossed 500, but I only made 25 grand last year. And you're trying to buy a $650,000 house. So those things don't oftentimes come together. So this program eliminates the tax returns completely and just looks at bank statements. And lenders can use either a 12-month or a 24-month bank statement program.
Now, Bruce, I think one of the things that people get concerned about with those loans, right, is we all have memories of 2008 and the market crash. And we all know, unless we weren't paying attention at all, that was caused largely by the mortgage industry writing really bad loans, right? And so it feels like it's one of those loans to some people and they're against it, right? But they're not those kind of loans.
Very true. But that's a really good point, Tom, because a lot of people, maybe not a lot of people, but some people are apprehensive about them because of that whole issue. And if you went through that time frame, you do not want to go through that again. That was horribly painful. But back then, what was happening is mortgage companies, primarily a company called Countrywide, along with Bank of America and Merrill Lynch and other companies, developed these
Wells
Fargo developed these non-qualifying loans. NINA, no income, no asset. But they were doing 100% financing, 120% financing. All you had to do is fog a mirror to qualify. So what was happening is there was no prudent underwriting at all. And you could put no money down as an investor and then get money back at the closing table. It was ridiculous. So they were irresponsible lending is what that was. Now they've made these so they're more prudent. There has to be skin in the game. There has to be something to validate. So there is still income validation. It's just not the same. Using W-2s and tax returns or using bank statements. So we know the company's got income. And if the company's got declining bank statements, meaning we're in November and January, the guy was doing 100 grand a month. Now he's only doing 25 grand a month. That's going to be a problem. That's not going to work for that program. So there is prudent things that underwriters look for. They also don't include deposits. But here's what that program does. It allows for a self-employed person to get into a home where they otherwise may not have been able to do so based on the way they filed their taxes.
Yeah, absolutely. We're working with a couple right now, and the downside of it is they put the cart before the horse, right? They found a great house, and then they said, "Oh, how do we get qualified?" And they lost the house, right? The and it doesn't take that long to get qualified. It's
No.
I think you actually qualified them pretty quickly,
Yes.
right? But documentation together. And so I think with these kind of programs, people need to be a little more proactive, right? And have their stuff together, right? Even if they don't have their taxes done, they need to be able to pull their bank statements quickly, get a CPA to write a letter about income or why something's written off, or all those little things that an underwriter is going to ask for.
Yep. The best thing for them to know is you need 12 to 24 month bank statements. You want to make sure they're relatively consistent, but some companies have fluctuation in their business. They're big in the holidays and they're weak in the summer or something of that nature. But this program helps the client. So I've got a class that I'm going to be involved in. I'm going to be one of the speakers on June 24th from 2 to 4 in Maitland, Florida. If you're a real estate professional, if you're a financial planner, or you deal with high net worth people or self-employed folks, you're going to want to register at WeBringYouHome.com. One of the other products that we're going to talk about is going to be a DSCR, or debt service coverage ratio loan. So a lot of folks want to buy investment properties right now, like this type of product, because they don't have to provide their tax returns. The income that's utilized for the transaction is the amount of that property can produce in rent. So as long as you can rent that property out and that rent amount is equal to or greater than the mortgage payment, that's the only income. Now, you still have to have good credit. You still have to put money down. Usually it's between 20 and 30% down. So you got a lot of skin in it, but it eliminates all that paperwork. And if you've got somebody that's got 5 businesses, they don't want to put P&Ls and balance sheets together and tax returns for all these different companies. They want to make it simple. And this product is very good for real estate agents to understand that they have options. But if they don't understand how these programs work, then how are you going to convey that information or actually go out and find the client? So in this class, we're going to actually prepare marketing material for the real estate professionals so that you can co-market these products to your database.
That's awesome. Yeah, I've certainly done my share of these programs, especially for the pretty popular for me. And then self-employed is really good. Now, what other programs are you going to be talking about in there? We covered DSCR and bank statement loans. What else you got?
Yeah. So asset loans. So
asset depletion.
I had a client.
Yeah.
Yep. Asset loans. If Fannie Mae's version of an asset depletion is horrible. So you would take the asset, say you have $1 million in the bank, you would take that asset and divide it by 360 months. That's not going to give you very much income to qualify. So
money is just sitting there stagnant, right?
But if somebody wanted to buy a $600,000 million house, even if you had $1 million in the bank, you wouldn't qualify for it if you didn't have other income. And a lot of these folks have high net worth, but they don't have any income. So we can take that asset and instead of dividing it by 360, we can use a 36-month, divide the asset by 36 months, or we can even show that if you have 150% of the amount that you're borrowing, then you've got enough assets to qualify. So there's all kinds of ways to be able to get around traditional guidelines, because I just had a client last month. He had a $550,000 house with a $5,000 mortgage payment on it, wanted to buy an $850,000 house, and he and his wife both had Social Security. They didn't even qualify for the house they already had, let alone the new $850,000 house. But he had enough money and assets where I could take that and show him how to divide that out and qualify. And then he said, Bruce, I don't want to use all that money and start taking distributions on it. I'll run out of money too fast. I'm going to show you how to cancel it the day we close, and then you're good to go. But this material is designed for real estate agents and financial planners to help their clients and be better servant leaders to their clients. So if you're interested, please register at WeBringYouHome.com. You will not want to miss this. We're going to talk about 1099 programs. We've got ITIN programs for people that may not have a social security number or want to use their social security number. So there's all kinds of little things we're going to bring to the table. So register for that. Yeah.
Awesome.
Yeah,
looking forward to it, man. I just checked my calendar to make sure that I was registered, and I am. So I will definitely be there.
It'll definitely be something that we'll pick up on. But more than anything else, I think that real estate agents find it difficult to find new material to reach out to old clients. How often can a real estate agent call their past client and go, "Hey, Bruce and Michelle, how's everything going? How's the house going? Do you know anybody else that wants to buy or sell or invest in real estate?" Sooner or later, you're like an Amway salesman, and they know what you're going to try to sell them, and they don't want to talk to you anymore. So if you can bring value to people, it's going to help you expand your horizons. And I think that's what it's all about. So
For sure.
So register at webringyouhome.com, and we're going to cover a lot of that. And then, Tom, I think we're going to put together a follow-up as well for one of our interviews that we did with the insurance commissioner. So we're going to talk a little bit more about insurance.
Correct. I know.
And I would like you guys all to know that Tom McNamara has an amazing YouTube channel that you can see anything you want to know about the tax relief from the state of Florida that DeSantis has put on the ballots. If you want to know more about it, go to @FloridaInsider.com. Is it? I know I have
Florida Real Estate Insider.
Florida Real Estate Insider. There you go.
Yep.
And you can see all of it.
Yep.
It's exploding. Tom is exploding. So, Tom, I appreciate you joining me today, and I'm looking forward to seeing you at this event.
Yeah, Bruce. See you then.
All right.